Hey, Mike, Philly Fed President Patrick Harker saying it is appropriate to raise rates, Federal Reserve interest rates, a few more times. He says 25 basis points is appropriate going forward, says the days of 75 basis point hikes are done. He expects to hold the policy rate there at some point during the year while the Fed continues to shrink its balance sheet. The goal, he said, of the Federal Reserve is to slow the economy modestly, bringing demand back in line with supply. He's seeing unmistakable signs of a slowdown in interest rate sensitive sectors. For example, housing. The economy, he says, remains relatively healthy. He expects modest growth, and he is not, a lot like other Fed officials, he is not forecasting a recession. He expects a slight uptick, I don't know if he'd call it slight, but he calls it slight, uptick in unemployment to 4.5%. The current rate's around 3.5%. He says, although inflation is biting, he sees Americans continuing to spend. Starting to see inflation come down and supply chains healing, a fact that was noted in the beige book we just talked about. Sees inflation at 3.5% this year, going to get down to 2%, but it's going to take to 2025 to get to the Fed's goal. The labor market remains in excellent shape, Harker says, and he's concerned about commercial real estate, specifically office space. One note in here, Mike, he says that it's an underrated advantage of the Fed that they're fighting inflation with the labor market in such a healthy state. So that's the way the Fed looks at things right here.
All right. It's hard to deny. Pretty consistent message there, it seems, from what we've been hearing. Thank you, Steve.